Welcome back to Robinhood Stock Market Watch List. My name is Carlos, and we also have Dave here with LofiTrader. Today is Sunday, 7th on April 2024. Go ahead and say hello, Dave.
Hey, what's going on, guys? Thanks for having me, Carlos. Once again, I appreciate you.
Absolutely, and like always, this is a very important stock market meeting that we always like to attend to. It is kind of like a free-for-all, so in case of anyone that is participating live, you can always feel free to help contribute. If you have any questions, please don't hesitate to let us know. But one of our things that we always like to do is to kind of look into events that would create a lot of volatility with the stock market, and that could be economic reports to earnings to news, and so these are all just highly critical things that we want to kind of take a look at. But we also want to remind ourselves that everything has a cycle, and including the stock market, our economy, our the cryptocurrency, which is something that we don't talk too much about because it just kind of goes with the flow. But I posted in our learning stocks chat room a very user friendly economic and a stock market cycle, and a cycle repeats itself. And so when you go through a cycle so many times, all of a sudden it just becomes more predictable. You know what's going to happen because it just kind of it's like a ball that bounces on, like a basketball that bounces on the ground. It bounces down, it goes up, then down. It just but eventually it's going to kind of slow down until you kind of give it a little tap. And so that sometimes is something where we may see like manipulation. We just kind of give it a little extra bounce, and all of a sudden we got some volatility. But it's always important to know kind of where are we at within these cycles. And so this is what we're seeing here on my screen. If you don't see it, try to dig in our little Discord software here and make sure that you pull this up. But it is something you can save that I have in our learning chat room. That way you can just download the image. But I have a kind of an X right here, kind of letting us know that we're most likely we're at the market top, and we've been kind of leaving the market top. But what does that mean exactly? And so normally when we are at the market bottom, for example, like let's say during COVID, when the government shut down the second quarter of 2020, they shut down businesses and stuff, and they just created a shortage, which resulted in inflation. But technology stocks and oil stocks were pretty low. Everything was so low except for certain COVID stocks. But going with the cycle, though, this is basically saying during the market bottom we need a focus on buying finance stocks, technology stocks, cyclical stocks. And so technology, mainly like Apple, Amazon, Tesla, these stocks were really on their rock bottom, and such a great buy on that. And so and then as we have gone through the bull market for the last year or so, and from that recovery we are kind of at the market top, where now you'll see these stocks, like particularly technology stocks, are really, really high right now. And when you look at these stocks right here, such as basic materials, energy stocks, staple stocks, they're really low, but they're starting to at the last couple months they're now up 10-15%, including gold, metal materials. So basic materials is basically your building materials, like stores like Lowe's, Home Depot. Staples is like retail stores like Walmart, Target, because and then energy is going to be like ExxonMobil, BP, and so on. And so when you look at that, as a long-term or short-term trader, you want to start repositioning your portfolio. And so that way you're kind of getting out of the technology stocks. Otherwise, they're just going to keep going down and down and down. Now, we've heard in the news, even in the last week, we've seen a lot of the politicians saying, "Oh, the economy's strong, blah blah blah." Well, it's one of the reasons why we're not lowering interest rates, and so just yet, and so because we still have a little bit more. Which the blue line is the economy. That's what we're talking about. The red line is the stock market. Stock market's starting to come down. Economy still has a little bit more to go, and that kind of gives us a pretty good idea where we're at and where we're headed. And so even though the economy has a little bit more to go, that means there's an early recession coming up ahead. And that could be something like right after the election, And so maybe they could blame, the next president for the recession. It's just all manipulation, minds, and games, but it's like a football game. This is like the game plan. This guy goes there, this guy goes over there. So hopefully that makes sense. We're getting a little feedback from someone here.
For you. We're good to go.
Let me see. Call here. Okay, I don't know. Okay. Anyways, so that is kind of the gist of the stock market and the economic cycle. So kind of know where we're at. And this is something we'll always kind of visit ahead later on. Did anybody have any questions?
7, 6, and 5, 6, and 7.
Did you have any questions? No. Just kind of going through.
I don't have any questions right now.
Okay, so we'll just keep going there. And then looking at the cryptocurrency cycle, which is, so the stock market and the economic cycle is basically a 10-year cycle, give or take 1 or 2 years. And so we're 5 years, the economy does really well. Next 5 years, the economy does really bad. So the stock market and the economy has a 10-year cycle. Stock market has a 4-year cycle, so which kind of pertains to the Bitcoin halving event that comes here in a couple weeks. And so basically 2 years we have kind of a bull market with the stock market, and then the next 2 years we have a bear market. And so the last couple of years is kind of where we've been is in that bear market, where it's been kind of really boring and kind of, people just kind of, frustrated. But, in the last several months, we've really kicked off an early start of the bull market before the cycle resets or the Bitcoin halving. And so what we can expect as we get closer to the Bitcoin halving, we got to remember, buy on rumors, sell on news. So if the Bitcoin halving event is the news, what's going to happen? It's going to kind of dip down a little bit, which is perfectly normal. And that's kind of what it's been doing now. It went from 70 to like 65-ish and whatnot. But once it resets, we still have the rest of the year. So most likely at the end of this year, Bitcoin could easily be 100,000, and the end of next year, 2025, Bitcoin can easily be, my estimation is about $240,000. Before, all of a sudden in 2026 is the bear market. Cryptocurrency, every single cryptocurrency is pretty much going to plunge. And so we do not want to hold any cryptocurrency during this period until the beginning of 2007, early 2007, January, February, March, somewhere in that first quarter. That's where we're going to want to buy in during the bottom of this cycle. And then we're going to have to hold for another year, but until 2028, all of a sudden the cryptocurrency is going to reset itself. And eventually Bitcoin is going to reach $1 million. It's inevitable. It's not a matter of if, but when. But again, it's important that we always know what's going to happen before it happens. Anybody have any questions on the cycles? And then we'll get into the economic reports. Perfect. So everything makes sense. Yeah, because if it doesn't make dollars, it doesn't make sense, and this is going to make a lot of dollars. So hopefully that is clear. And again, you can always save those pictures that are in the chat room. So here we are under the economic calendar, and again, we always need to filter it because it's going to provide a lot of gibberish. So we want to click the filters button, whether we're on the website or if you download the app. We want to clear everything. We want to put a check mark under two areas. A check mark under United States, and under importance, we have a 1 star, 2 stars, and a 3 stars. You want to put a check mark under 3 stars because what we're telling this system is to pull everything that will have the biggest impact on the United States stock market. And that is what we need to know, because this is like our kind of like building our battle plan. There's a thing that pro traders and investors say is to always plan your trades and trade your plan, because if you fail to plan, or if you fail to plan, you're planning to fail. And so that is not that's not us, and so that is something we always need to look into as we do more research. This is our economic report for this week. It looks pretty light for the most part, except for Wednesday and Thursdays obviously are going to be the most volatile times of this week. And so there's no Monday, no Tuesday. Usually there's a Tuesday, Wednesday, Thursday, but we just have a lot of economic reports on Wednesday and Thursday. And so, and if you're not sure what these are, because it's nice how like I said, we filtered them down to kind of the nitty gritty, where these are the main ones that are going to provide a massive amount of volatility. So if you're not sure what these are, feel free to click on them, because a new tab will appear, and it'll provide a very small, easy paragraph letting you know what it is and how it'll affect the stock market. For example, the Core Consumer Price Index, or CPI, measures the changes in the price of the goods and services, but excluding food and energy. The CPI measures price change from the perspective of the consumer, is a key way to measure changes in purchasing trends and in inflation. And then, so how it can affect the market is right here. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market. Unless they need to lower the US dollar value. And that's where our good news can be bad news. So we're going to have to mute Jet there. Okay, hopefully that works. So while a lower than expected reading should be taken as a negative or bearish. And so as most economic reports need to be higher than the previous report, there are a couple reports that need to be less than the previous reports, and that is the crude oil inventory levels and the unemployment report, which they call the initial jobless claims. The lower the better, because the lower just means it helps the economy better. Now, the core CPI month over month for the month of March. And so it's important to know the times of when these are going to be released, so that way you know if it's going to affect the stock market before the stock market opens or after the stock market opens. So in this case, when we're looking at the website, it's defaulting to the Eastern time zone. So we're at 8:30, so this means it's going to be released 1 hour before the stock market opens. So expect a lot of volatility on Wednesday. But what kind of volatility? And so we can kind of determine that by looking at the forecast versus the previous. So if we see the forecast here, which was 0.3 versus the previous is 0.4, this means it is less than the previous. So typically this would be bearish, but again, unless we need to lower the US dollar value, then that would result in bad news is good news. But for the majority, this is how it would affect the market, by being bearish until further notice. However, we see a yearly one, well, year over year, but for the month of March, which these, anytime we have one economic reports that are rare, such as a monthly or quarterly or yearly, those are going to provide a lot of volatility versus a weekly report, which we get every week, so it's not that rare, and so it's not going to be that volatile compared to these other ones. And so, but we are seeing some mixed signals here with a 3.4% forecast versus the 3.2. So this is telling us, this is bullish. So we got bearish, bullish, and then we have the CPI month over month for the month of March as well at 0.3%, where the previous was 0.4%. So another bearish, report. So definitely mixed. Right there. And then going to the crude oil inventory levels, we don't see a forecast there, or for the 10-year note auction, which that is a very rare one, so we could easily see a lot of volatility with that one. Now, the crude oil inventory levels, we can kind of figure out what it's going to be because it is a weekly report, and the oil inventory levels report goes up and down pretty significantly, and we can see that they were up previously last week, and so that means this week they should be down significantly. So if they're down significantly, that would mean it would be bullish, because crude oil inventory levels and unemployment levels need to be down for it to be a positive thing. And so so again, we're seeing bullish, bearish for Wednesday. So we're going to see stocks probably just flying all over the place. It's just going to be a mess, but volatility is great opportunity, and that's what we're looking for, especially if we're in a straddling stock options, which is one of my favorite things. But we also have the crude oil inventory levels, which is scheduled to be released 1 hour after the stock market opens, which is great because usually the first hour and the last hour of the stock market are the most volatile times of the day. So for this to be released 1 hour after the stock market, it's like kind of pouring more fuel on the fire, just making sure that we got volatility throughout the day. And so, but we do have some of the Fed speakers with their meetings and stuff that are also going to help provide more volatility during the middle of the day and during power hour. And so Wednesday definitely looks like it is going to be the most volatile day of this week. So let's definitely be prepared and plan for that. Thursday, April 11th, we have two economic reports that are scheduled to be released before the stock market opens. The first one, which is the unemployment report, which the forecast is predicted to be less than the previous, which is bullish. And so forecast at 217,000, where the previous was 221,000. Now the PPI month over month for the month of March is forecast to be 0.3%. And where the previous was 0.6%. So, but because this is a more of a rare economic report compared to the unemployment report, this should be a little more potent versus the weekly report. So I would say that we could be more bearish than bullish. And then we have a 30-year bond auction, another very, very rare economic report to be released sometime during the day, and which could also affect during the power hour of Thursday. So these are going to make these evenings very, very volatile. So let's definitely be prepared for that. But since there's no forecast on these, we want to make sure we're going to revisit this during pre-market hours. Hopefully they've populated them with some kind of information. And so any questions on this, you guys? Everything pretty good?
I actually just want to point out to everybody, since this gets a little confusing for everybody when it comes to the core CPI year over year, the monthly, the FOMC minutes, initial jobless claims, the PPI, and then there's a few other that come out. I actually cover all of those to make them a little bit more bite-sized for you on the YouTube channel. And we are an affiliate with Robinhood Stock Market Watchlist, so if you want to come over and give me a subscribe, it'll pop up on your feed as well. We also post in Robinhood Stock Market Watchlist, so that way we cover all of these things. Because we go over these in the meetings every start of every meeting, and it becomes a little bit more difficult for the newer investor and sometimes the seasoned vet. They just want the quick bite size of what happened. I do YouTube shorts on every CPI, every FOMC meeting. We actually stream it live, every initial jobless claims, and every PPI. So if you're interested in understanding this better, or even if you just want a quick, this is good or this is bad for the economy and the stock market, if you come on over to LofiTrader, hit that subscribe button, I'll be more than happy to shoot those your way. And of course, I always post them in Robinhood Stock Market Watchlist. These are very volatile times. The data that gets ingested by who I like to call Papa Powell, or Mr. Powell, we'll just call him. He takes this information in and he uses this to digest it and understand whether or not he should raise or lower these interest rates or just keep them the same. And the interest rates right now are what is the most important thing for the overall stock market. If we raise interest rates, it's going to make the stock market crash in a sense, okay? If we keep them the same, using the Fed interest rate hike, that's what's to be expected in April. But if we lower interest rates and it takes you by surprise, the market is going to skyrocket, because with lower interest rates comes more spending. It has more spending for companies, more spending for employees, more spending for everybody who borrows any kind of money from any bank. It also releases, those banks can release money for cheaper. So people are going to be buying more houses even in this volatile time with already crazy house prices. So that being said, if you don't understand completely or you just don't have the time, I do. I cover all of this. And we like I said, we are an affiliate. When I met Carlos and he started preaching these things to me in the beginning of our relationship, I had to look a little bit deeper into all of this. And the next thing I know, I actually became obsessed with the data, what it was telling me, and then watching how volatile the market is, ingesting some of this data. So, if you can understand it a little better, or you at least know what's going on with the economy, it makes your trading a lot less volatile in the P&L. So keep that in mind, guys.
Oh, definitely, and also just part of learning is just kind of hanging out here and in our chat rooms, our group, and just kind of learning from each other, because every person specializes in something different. You can kind of pick and choose, what you want to learn and what you want to specialize in. So when I put this group together many years ago, and the stock market is very time sensitive, and I knew that the group just wasn't that effective enough to where we needed to sometimes get messages out instantly and right then and there, versus posting it in a group. Sometimes it takes time to go through different things, and so we could be missing opportunities. So it's like, okay, we need live chat rooms to kind of go over things more for active traders. That way we can kind of react to the things that are going on, and it's been highly effective, and it's been very, very successful. And again, we can kind of all learn from each other. And when I did that, and other people started talking more about economic reports, I'm like, and I as well, just like David, I just kind of realized how important that this is, and that we've been missing out on it the whole time. Because what you've noticed, if you haven't already, that all of a sudden you'll see stocks move, or the stock market move up or down, and you're not sure why, and then all of a sudden you start getting these news alerts from your news applications. Hey, this is what's going on, or this is what just happened. And it's usually because of the economic reports. So if we just know when these economic reports are going to come out and how they're going to affect the stock market, now that gives us a huge advantage of what's going to happen before it happens. And so I have pulled up here on my screen the federal interest rate decision for the remaining of this year. And so these are just the meetings of when they're going to talk about whether they should start lowering interest rates, or if they should just skip and just go on to the next meeting. So next meeting is May 1st, next one is June 12th, then July 31st, September 18th, November 7th, and the last one is December 18th. And so if you just recently bought a house or a vehicle, you can easily refinance your loans. I would say towards the end of this year or the beginning of next year, because rates would obviously be a little lower. But again, that could cause a lot of people to react to that, and that's where we'll see a lot of more financial stocks probably going up, as well as automotive sales and stuff, because now people are kind of coming out of the woodwork and buying things. So just be prepared that this also will have an effect on the stock market and inflation and all kinds of stuff. And so let's dig into our most anticipated financial earnings for this week. I have it pulled up here in our group. Just posted it earlier or this evening here. Now our top 10 is so we are in a new earnings season, and so this is just kind of the beginning. And so the most anticipated earning releases for this week is going to be Tilray, which is number one, Delta Airlines, JP Morgan, and then we have this HR Test Systems, the Constellation Brands, WD-40, Wells Fargo, BlackRock, Citigroup, and Progressive. So, and if you don't have this, you can easily download it in our featured and announcements area. This is where I bookmark all of my posts for your advantage. And so, but yeah, and then so we have a few other ones in here too that will do pretty nicely. But like I said, this is just kind of the start, but. The most volatile one out of all these is probably going to be Tilray and probably Delta Airlines. But let's take a look at their analysis really quick. If you guys haven't seen Elon Musk's recent talk with the whole SpaceX thing, I did post this in the feature announcement there. It's been shortened, saving about 40% of the times. That way, it's just going to the whole nitty gritty of what he's talking about. Very interesting stuff. All these things he has planned for the moon, the Mars. I mean, he's almost there. And I remember years ago, like 5-10 years ago, he was like, they're going to start sending people to Mars in 2025. I'm like, oh man, it's like, yeah, right. But we're getting closer to that point where they're he's laying out all the plans and the blueprints of all these things. But he's also talking about all these jobs that are going to be needed to do all these things, whether it be in space, all these jobs on Mars, and this is just it was just almost enough to make your head spin. And again, if you haven't seen it, definitely you'll want to watch that. Now, also earlier today, Boeing, if you guys haven't seen that, the Boeing 737 Southwest Airlines had a emergency landing over there in I can't remember what state, but they were on their way to Houston, Texas, and the whole, it looked like the engine compartment was just breaking apart. So definitely we're going to take a watch on puts on Boeing, so that's definitely going to be on our watch list. There's Dave with the LofiTrader. You can always click on that and subscribe. That way you get the alerts. Now Tilray, which is right here, it's always a good idea. I think that we talk about cannabis every once in a while, because cannabis has one more phenomenal opportunity left. That's inevitable to happen. And so, but Tilray, or the ticker's TLRY, is confirmed to release their earnings on Tuesday, April 9th, before the stock market opens, and it's expected to beat their estimates. Investors are also bullish going to the company's earning release, with a 73.3% expecting an earnings beat. And if also on Wednesday, April 3rd, there was a notable amount of a significant amount of buying contracts, 26,000 contracts of the $3 call strike price that expires on April 12th, which I think it's almost right there. And so, but if we take a look at its graphs and charts, I would say it's probably not in the money. I mean, well, let's take a look. Dave, do you have Tilray pulled up?
I do. I do. I do.
You guys, let's take a look at his screen and let's take a look at what you guys think.
You guys can click on my name in the Discord if you'd like, and you can see on my screen here just exactly what we have going on for Tilray. You'll see right off the get, I always like to show you the daily, where we started off and where we ended up, okay? So I'm going to zoom in here and give you a little bit better understanding. Now, the one thing I always like to do when I'm charting is I look at the 200-day moving average. There's a couple things that I like to look at when I'm looking at a 200-day moving average, okay? Now we're nice and zoomed in here. You can see this teal line here, okay? There's two things that I want to see in a stock before I can give it the green light to put on even my watch list. One, it needs to be above a 200-day moving average. And also, I like to see the 200-day moving average starting to curl up. We're actually starting to see that now in Tilray Brands. Now, somebody asked me about the stock just last week when it just got above this, just when it started to curl. Now is the time where I'm actually keeping this on my watch list. Here's the issue. We are pushing up higher, but we have a lot of overhead resistance. So when we see this here, we're sitting at $2.60, okay? We are bearing back down on that 10-day. I like to see stocks riding that 10 and 21-day moving average and above a 200-day curling up moving average. We're starting to see that now. Now, personally, when I play a stock, if I'm looking at getting in, this is a stock that's on my watch list, but I will not get in this until after earnings. Earnings are on the 9th. So that's what, Wednesday, I believe? No, that's Tuesday. So on Tuesday, this will definitely be on my watch list because if this thing is to gap up after it's been beaten down for so long, I mean, this thing really has been beaten down. So if this thing gaps up, let's say over 7 or 8%, I'll be looking to take a trade in the opening range break because this could be an episodic pivot. This thing could really get some legs here and take off. So if you're not already in this stock, I would highly suggest putting this on your watch list because it is showing some momentum. There is a lot of news, and the whole sector, the whole MJ sector, is actually looking like it's very volatile right now, okay? And like Carlos was saying, there's been a lot of contracts being bought recently. You can see that here in the volume. You can see that on this big push down, there's not much volume, and there hasn't been much volume traded since last year. Now, all of a sudden, we're seeing volume ramp up. Now, we don't know what's going to actually happen. Nobody really knows, and if they tell you that they know what's going to happen, you're listening to the wrong group of people. When we look at something like this, we're looking at the price action. We're ingesting as much data as we can, and once we see the move, that is when we can react. So right now, this is looking positive for Tilray, even though it's been beat down for so many years, guys. Since its IPO, this thing got so beaten down. And then we had this huge spike up, huge movement, and then just a huge sell-off on that. So this thing is I mean, it's the opposite of what you want to see in a long-term stock. But this thing, I might call a cigarette butt, like Warren Buffett likes to call it, where it might have one last puff in it. It might have one last hurrah. Now, this thing might turn around and head up higher, but when I see all these people that are bagged and trapped in here, it's going to be hard for this thing to continually push higher and higher and higher because there's so many people that are in this that are willing to break even. At the same time, if Tilray does show that its earnings are palpable and they can take off from this area, that might be a good sign for the overall stock. So I like it. I like it for my watch list. I don't know if I like it long term, especially with all the overhead resistance, but that's what I got.
Yeah, this is definitely not a long-term stock. If you guys want to tap back into my screen, we'll kind of continue with Tilray, and but let's also talk about the cannabis industry, but also what kind of happened too. If you weren't trading stocks several years ago and not sure what happened with the cannabis industry. it was a very slow process for states, whether it's the United States or Canada, to they started off with implementing medical marijuana, and then eventually it became recreational over in Colorado, and then Washington State was second, and so on. Well, the state of Canada was kind of the same thing. Well, they went through a voting process to see if they should just vote on legalizing it from coast to coast, and the United States does this too, but it just always fails once it goes through certain channels. But so with Canada, they started to list Canadian cannabis stocks or companies to the stock market, and we started kind of investing into them and whatnot. And Tilray was $50, $60, and whatnot, and many of these other ones were $100, $150, and so but because of it was a very high demand and with a low supply. And when you have a situation like that, it becomes very, very valuable. And so when they voted on legalizing it from coast to coast, it doesn't always go in effect immediately. It does during the next calendar year. So if they vote on it and they say, oh, okay, we legalize, or we voted on legalizing recreational cannabis from coast to coast, again, now between now and next year, we have this whole time to pump up these stocks, and that's what happened. These stocks just went flying. But when the time where they legalized recreational cannabis from coast to coast, what happened is there was too many farmers, there was too many growers, there was too many stores. Now the supply flooded itself. The supply was overwhelming the market, and so they just had to cheap sell things. People weren't making as much money. The companies weren't making as much. So now they all plunged down to penny stocks. We're seeing $1, $2, $3 cannabis stocks. And so this situation is going to happen one last time with the United States, and is definitely not a long-term stock, because it's going to flood itself. But we may also see some weird other things where other corporations will maybe buy each other out, and we've seen that with other industries, like Tyson and whatnot. But it's definitely not long term. So we need to know when to kind of get in pretty heavily and when to get out. And so this is going to happen here in the United States in two ways. It's either we're going to vote on it, and it's going to pass all the channels, which in the last several years it doesn't. It passes the first channel, then they try to go through another channel, and then they're like, no, and then it just then they have to start over and do it again next year or whenever. Or once the United States has a certain amount of states, like let's say more than 50%, let's say 51, 55, 60% of the amount of states in America that have legalized recreational cannabis, now it becomes automatic. So now it doesn't even matter about the whole voting thing. Now it's just federally legal. So we have to be very vigilant on these two scenarios, so that way we can make sure that we're in investing into these, and looking at that graph and chart, that definitely looks pretty nice, because we're seeing a lot of these moving average lines that we're getting ready to kind of cross over. But that could be kind of like a false positive as well. I mean, it can easily go down, but the odds look like they are more in our favor, because with a 73.3 expecting an earnings beat, typically the average was right around 65%. So any less than that would be considered below average. Any more than that should be considered above average. And so this is definitely looking pretty good, and I would anticipate we should see anywhere between a 10, maybe even a 20% price movement in either direction, whether it be up or down. But with where it's currently at, it could easily go either direction. That 10 or 20%, it could easily go up just as much as it can go down. but I think the odds are just more in the Bulls' favor on that. So that's just kind of the whole cannabis thing. That's like I said, it's always a great reminder of knowing a little bit more about the history of things and kind of where we're at now, but also where we're headed. And so we just got, like I said, one more opportunity on that. Now, Delta, it's gonna be interesting with the bad news with Boeing, lately, and how that can also affect a lot of these airlines. Delta Airlines, or DAL for their ticker, is confirmed to release their earnings on Wednesday, April 10th. Before the stock market opens, and is expected to beat their estimates. Investors are bullish going into the company's earnings release with a 61.8% expecting an earnings beat. On Monday, April 1st, there was a large amount of buying contracts, right around 33,000 contracts of the $50 call that expires on Friday, May 17th. Dave, what does your charts and graphs look like for Delta Airlines?
Well, let's take a little peek. We might have to mute whoever just came in, though, real quick, if you don't mind doing that while I bring up Delta. All right, guys, so the first thing I like to look at when I'm seeing a lot of data like this, I'm going to go ahead and switch it to the weekly. The issue that I have with Delta here, and looking on the weekly, is we've been just trading sideways. We've just really been trading sideways from, let's see, October 2020. I mean, it's never gotten back to where it's originally had been after COVID lows. I know that Delta used to have some pretty big issues. I don't recall exactly what the news was, but there was a lot of issues with them. We know they're above a curling 200-day moving average currently, which is great to see, but they have to break above this $50 area. This 49.75 area looks like it's pretty rough. So since it's just been chopping back and forth since 2020, it's been chopping around and fluctuating within about a $10 range, $10 to $13 range here, guys. So we're not really seeing much happen. Now, if we zoom in on the daily, now that we've ingested some of this information, you can see it's got like this V-shaped bottom here, okay? So seeing this and seeing that it's up on a 200-day moving average, if it can break through this area and head back to where it came from, this might be a good long-term investment. But I wouldn't get too excited with it just chopping around like this, and it only moves 2.5%. I like faster movers than that. But seeing that we have earnings on the 10th, which is just this week, this might be one to keep on your watch list to see if it does have that volatile move that I was talking to you about, Tilray. If we can get that volatile move so it breaks up and above this area, we can go ahead and set like an alert right here, 49.75-ish. If it can get above that area, we don't have too much overhead resistance. And why do I say that? Because we see this just above it, right? You say, oh, well, there's not too much overhead resistance. Look at all these people track. But look at the volume down here, okay? Not only is it from 2019 and 2018 back here, which means most likely these people still don't have the shares. But if we bring up the volume on here, you'll see there's not much volume at all back here compared to the volume that was selling off and the volume that was being bought up down here at these lows. So if it can get up above that, that's the most significant sighting I can see in the overall weekly chart of Delta Airlines. And that's about all I got for you there on that one, Carlos.
Yeah, I definitely see a lot more green on those volume bars than red. So, I think people are trying. They know that that this stock has more potential to go. At $46 a share, and what we're seeing an unusual amount of buying activity on a $50 call strike price. That's a good 10% gain. And so, that looks good. It seems like it's kind of bouncing off that blue moving average line for the more of a long-term, short-term strategy. So, it's kind of skipping up on that and keep going. So that definitely looks bullish. So let's take a look at the next most anticipated financial earnings for this week. If you guys want to tap back onto my screen, we got JP Morgan on here. JP is the ticker and is confirming the release of their earnings on Friday, April 12th, before the stock market opens, and they're expected to beat their estimates. Investors are bullish going to the company's earning release with a 62.3% expecting earnings beat, which is, like I said, right around average. And there was a very large amount of buying contracts on March 28th, right around 35,000 contracts of the $210 call strike price that expires on Friday, June 21st of this year. Dave, let's take a look at Dave's graphs and charts, you guys.
Yeah, guys, I got JP Morgan pulled up on my chartings here. This is Thinkorswim that I'm using. It's through Charles Schwab, and you can download this charting platform for free. I really do enjoy it. But this JP Morgan here, this JP Morgan Chase, has been on a nice terror to the north side. You can see the first thing that we always look at is this 200-day moving average for the longer term investing. And you can see it's just bounced off this 200-day moving average, and it's curling up to the north side. It's absolutely beautiful push here, well above this 200-day moving average, following all these moving averages. And also, it's bouncing off this 21-day moving average. What else is bouncing off the 21-day moving average is the S&P 500. This is showing relative strength in the overall market. This is absolutely, and I'll even pull this up, this JP Morgan up on my other charting platform here so you can actually see the relative strength index on this here. Let me bring up the Market Smith indicators. And here we go. The relative strength index on this, the rating is over 93%, bouncing off the 21-day moving average. So its relative strength compared to the S&P 500 is very, very strong. Now, you can see that we are at an all-time high here. Let me just go out to the weekly to make sure I'm not being a liar. Yeah, so we are also at an all-time high here. And now I know a lot of people say, well, we're at all-time highs, so this thing is going to fail at any time. But that's not true. A lot of the investors that I have read about, including William O'Neill, rest in peace, he just passed about 6 months ago. One of the things that he said is usually a stock that is going high seems to go higher. And there's like Darvis, one of the most influential stock market books out there. How I made over $2 million in stocks, and he did this in the 70s. Also said, my new rule is buy dear and sell dearer, meaning buy high and sell higher. So when you see these things that are breaking out and they're at all-time highs, sometimes these are very, very smart to keep on your watch list. Now, of course, with earnings coming out in just a few days, we don't want to be in a stock unless you're already in it and you have a nice lead on it. Me personally, I like to look at these stocks and I like to find trend breaks. So meaning back here, you can see a nice trend break. This isn't as clean, but you can see the reason why it chopped around is, well, earnings. That's why. So we have a nice downtrend here, and then you can see it popped up, sold back off, got bought back up, and then unless you're used to that kind of volatility or you're not holding on to too many shares, you don't want to be a part of this. I much rather be a part of this, where it breaks the trend right here. So it creates this trend, volatility comes in, shakes everybody out, gets everybody in, gets them sold off, and then breaks out right here. This is a beautiful spot, a beautiful trend break, and a beautiful bounce off this 30-day moving average. There's also base. And guys, that's one thing that we like to do at LofiTrader. LofiTrader on YouTube, all one word. If you subscribe, we like to go over a lot of these things too. We also post this in the Robinhood Stock Market watch list. We do trend breaks. We do base breakouts. Look at this beautiful base breakout right here, guys. We can see that it's holding a 10-day moving average. It has a what I call an oops reversal or a shakeout day, and then it takes off higher. That is such a beautiful thing. That is such a beautiful thing, guys. When you see something creating this trend, this uptrend, it breaks all-time highs right here. I'll even mark this out for you because it's so pretty. It makes an all-time new high. And then after making an all-time new high, it forms a trend line, breaks up, breaks that all-time high, creates a base, and now it continues higher. Absolutely beautiful to see. So what are we looking for again? Well, we don't always say that history is going to repeat itself. We can't always say that. But if we see this downtrend before the earnings and then we have a big shakeout and it continues higher, what do we have here? Well, look at this. Another trend, another downtrend here. Absolutely beautiful. What's going to happen in a few days? Well, we're probably going to get some volatility in this once it settles down. if we have a play, whether it's a trend break or a base break, this might be a beautiful stock to get into. Now, I will say this is a slower moving stock. This is more for a long-term investor or a swing trader. This is less of a day trade stock, so because it only moves about 1.4%. Now, that's 3 times faster than your ETFs, like your S&P 500s, so it does move a little faster being an individual stock, but it is still a slow mover compared to the the penny stocks or your dollar stocks, or like a TLRY, which moves 10.2%. Okay, this is a make or break kind of your account thing, where JP Morgan is a 1.4%. What is ADR? Average daily range. It's the amount the stock's going to move in an average day. So I like JP Morgan up here. I haven't actually looked at JP Morgan in a long time, so I'm glad that you brought that up, Carlos, because wow, what a beautiful move. All-time highs. This is what I call a blue sky stock. When you have something like Tilray, what did I say before about Tilray? Tilray has a lot of that overhead resistance. JP Morgan has no overhead resistance. There's nothing stopping this thing from continuing higher. There's nothing up here. So it's blue skies. It's sky's the limit. This thing can go up as high and as long as the stock, until it finds some demand, or until it finds some supply, right? And the supply will only be coming from the people that bought it in down here. So there's no supply overhead, which is just a beautiful thing. So definitely keep this one on your watch list. And Carlos, great pick on this earnings. This could be a beautiful gap up. So yeah, I really like this one. Thanks for bringing that to our attention.
Yeah, definitely. I mean, that definitely looks, like it's also, very, very valuable. It looks like it's been trending upwards for quite a while, which also leads back to the whole economic cycle and stock market cycle. When the market was at its bottom, that was where we wanted to look at the buying technology stocks, finance stocks, and others. So let's tap back onto my screen. If you want, we can revisit that really quick. So if you want, go ahead and click back on the Robinhood screen. I'm going to pull that up here for you. Again, as a reminder, this is the stock market and economic cycle. When we're at that market bottom, so you're in the green little boxes, says that's where we wanted to start investing into the financial stocks, technology stocks, and cyclical stocks. And but now, again, we're at the market top, and we can see that not just those financial stocks look like that, but also the technology stocks. And so it's almost looking like, just like you pointed out, that they're kind of downtrend, that looking like they're going to downtrend, but is it going to be kind of a false looking thing? Is it going to go down a little bit, or is it going to go down a lot? With our economic cycle, it should go down a lot, but how much, who knows, but or how that's going to happen. It could just be done economically, or politicians may create something that could scare investors, that even for the election, as we get closer and closer to the election is going to provide uncertainty. And anytime traders and investors get close to uncertainty, they'll sell and just kind of wait and see what happens, and then reinvest after the election. And so it just depends on who, because each president will, or potential president, will have a different effect on the market and the economy. And so this could help like EV stocks, or one may not. And so that is the uncertainty, and so that is where we're going to see more bearish activity throughout the year. But like I said, once we get through the election, that will provide more clarity and certainty of which direction things are going to go. And so, but yeah, so it's always good to kind of revisit the whole financial section of where we're at, and we can kind of see that even with this graph, looking at that JP Morgan graph, we can kind of see where it's starting to dip, and we can kind of see So it's just very interesting. Putting all these pieces of puzzles together, things are looking more clear. All the stars are aligning of kind of where we're at and where what's going to happen before it happens. But we just don't know exactly, how much. And so going into the next financial earnings release is this AEHR Test Systems, which is confirmed to release their earnings on Tuesday after the stock market opens, and they're expected to beat their estimates. Investors are bearish, however, going to the company's earning release with a 71.4% expecting an earnings beat, which is very interesting. It's very interesting when we kind of see, they're expected to beat, but investors are bearish, even though they're expected to percentages higher than average. And then on March 25th, on Monday, there was an unusual amount of about 1,000 contracts of a $10 put. And a 850 contracts of a $15 call that all expire on Friday, April 19th. So that's a very interesting one. And if you're not sure, what this company is, sometimes the image may provide some insight on what they kind of provide, and so but they're definitely a technology company. Dave, do you have any insight on your graphs and charts? My guess with this kind of information, they're probably priced in high already and probably need to come down. What are your thoughts?
Well, first I want to say when I'm looking at something like this, I have been watching AEHR for a long time, guys, a long time. This was one of my first stocks where I decided to just let go when it was all the way down here, and it had this beautiful breakout, and I thought, I'll let this pass. And I let it pass, and I let it pass, and man, it made me sick looking back on it when it made it all the way up to 54.10. But no, actually, Carlos, it's actually sitting down here close to its lows, 1134 now, and still looking like it has room to come down, unfortunately. It's well below a 200-day moving average, and also that 200-day moving average might as well be pointing straight down to the depths of where.
Oh, wow.
It looks pretty sad now. I can say this though for stocks like this, when you see a stock just going straight down like this, there's a big chance for a bounce. It might be a dead cat bounce, but it probably will bounce. Just like you see here, it fell down very fast, very quick, and then it bounced up here. It has an opportunity to also bounce here. Now, this is a fast mover, guys, 6.3%. Still not as fast as Tilray, but 6.3% can make or break your account in a couple of weeks, depending on how many shares you buy. So if you're looking at something like this, please be very careful. Now, if AEHR comes out with a very, very good priced, very good earnings, they're showing a lot of earnings per share is higher, that they're actually making money rather than burning money, then that might be good for the overall stock itself. And since I haven't looked in a while, I'll just look at kind of the fundamentals here. Just a quick glance is what I like to do. And you can see here on the income statement, we have Q4 over here, and we have Q4. Now, whenever you're kind of comparing a stock's when you're kind of comparing a stock's Q4s, you want to do the same quarter. So if you're comparing their quarter, don't compare their Q4 to their Q2. Just like any company, you want to compare the same seasonality to itself. So if we're going to compare Q4, we need to look at previous Q4. If we're going to look at Q1, we need to compare it to Q1. And it does look like the quarterly looks very, very well. Let's look at the annual here. So it does look like this stock does look like it's doing well, at least on paper. Now we could go in and we could figure out and see how diluted this actually is. And if we scroll down here, we can look at the basic earnings per share, and it doesn't look like this is too bad of a setup. It doesn't look too bad at all. Now, it looks like in 2018 they had a lot of trouble here, but it looks like they're recovering okay. So this, it wouldn't be too crazy to see this stock on earnings gap up and head on higher. But like I said, this far below a 200-day moving average has way more proving to do. The 200 average moving down, not even sideways, more proving to do. The relative strength index on this thing is at a 1. I don't think I've ever seen a 0, but it's not looking so hot. We want to see 90 or higher on the relative strength compared to the overall market for continuation plays. So seeing AEHR down here, sure, we might get a bounce, but I think we have a lot more proving to do in the stock before we want to see anything turn. But I'm not saying to not put this on your watch list. Anytime you have earnings in a stock that has volatile movement like this, it's nice to see what happens to it after earnings. So I would definitely put this on your watch list, guys.
Yeah, that looks good. It looks like it's kind of, the downtrending momentum looks like it's slowed down and may have found its bottom potentially, but definitely a good one to kind of keep on our watch list, and that's why it's on our top 10 most anticipated earnings release. So if we want, let's tap back into my screen. So if you want, click back on the Robinhood screen. That way we'll take a look at the next most anticipated financial earnings for this week, which is the Constellation Brands, and so which is always a very, in fact, it is America's number one, alcoholic beverage for the United States now since what happened to Budweiser, and so this is always going to get a lot of attention because of their sales have gone up tremendously since then. So it's always good to kind of take a look at their financial earnings. So the Constellation Brands, or the STZ for the ticker, is confirmed to release their earnings this Thursday, April 11th, before the stock market opens, and they're expected to beat their estimates. Investors are also bullish going into the company's earning release with a 68.8% expecting an earnings beat. Now, on Wednesday, April 3rd, there was a slightly unusual amount of contracts on that, almost 600 of the $315 call strike price that expires this Friday, April 14th. And so, but usually people don't usually do options with this stock, but let's definitely take a look at the graphs and charts on Dave's screen. So if you want, let's tap back onto his screen and let's take a look. You're muted, so unmute your mic, LofiTrader, or Dave. Go ahead.
Hey, thank you. I was chatting with you guys too. I was getting deep right there, so thanks for the reminder there, Carlos. Not embarrassing at all. But no, Constellation Brand. I actually had no idea about this. So I'm glad that you brought this to my attention. I knew Budweiser was in some serious crap about some of the things that they were doing. A lot of people were very unhappy with their decisions. Now, if we look at Constellation Brand, we can see it's just been kind of trading sideways all the way from over here from 2021. But now it's finally starting to break out of this channel. Okay, so the channel was here from at the base here of 210. And at the top here at 259. This is a slower mover at 1.5% ADR, but it is above a 200 curling up to the north side 200-day moving average. So it being above that is a good sign. Also, it's broke above not just once but twice now at that 259.50, that $260 area. Very important area. So if it can hold, I would like to see for once this being held as support. So at one point in time, this was considered its resistance, right? It broke up above it, and then it started acting as support right here. So let's zoom in on this. It started acting as support right here, which is beautiful. We want to see this in this area. If we were just here in this time, we want to see this area acting like a base breakout. Now, this base breakout obviously wouldn't have worked. You could even flip this to the sell side, and you could have sold this stock if it broke down, right, like it did. But this stock here decided to break down and then head back up. Now, can we see this stock act again as support rather than resistance? And if it can hold, we might get another base breakout right here or a base breakdown. So we can see what happened previous. Maybe after earnings, maybe we get some more information here, and this can take off even higher to the north side. But I'm not the one to try and predict that. I would react, and this would be my reaction. Say I got in here, and then it broke down. My stop out would be down here. I'd be stopped out, and then looking for some kind of pop to sell into that. Okay, so this would be a beautiful play for a breakout if it wants to trade sideways. Where would this be in your cycle? What would this be considered? Consumer staple?
I think so. Yeah, it'd be retail product. So it'd be
Okay.
retail sales.
And so retail sales would be in what part of the cycle? Would that be heading up, I believe?
Let's see here. Let me get
Sorry
back
to
in
put you
there.
on the
Oh, no
spot there,
worries.
brother. I'm curious myself, honestly.
So I just had to pull it up here really quick.
Sure.
So that's basically kind of where we're at now is where we need to.
So staples. So
So
would that
Staples, which
be
would be the brand, and so a lot of people. That would definitely be a good one because of the consumer spending of that, and it looks like we're trending upwards with that one too.
Yeah,
With
it does
being
look like it's
above the
definitely
blue
trending
line,
upwards. Yeah.
kind of
Yep.
bouncing off that, staying above water, and
Yes, it is.
continuing to go up.
Yeah, this is a beautiful uptrend right here. So if it can continue, and if consumer staples are supposed to be what is supposed to take us higher at this market cycle, it might definitely be one to keep on your watch list. So if earnings comes out and it's positive and we can hold on to this uptrend, it might definitely be one to be able to get in at a lower price.
Yeah, that's definitely that looks pretty good, and is one of the
It's
reasons,
getting tight.
huh?
It's starting to get tight. If this uptrend can continue up and then use this area of supply to continually get tighter and tighter around this 260, if it can't go down any further, but it keeps wanting to push up higher, eventually it's going to run out of supply and it's going to take off to the north side. So
Yeah,
that's about all I got.
that looks pretty good. So let's tap back onto my screen, you guys. If you want to click back on the Robinhood screen, we'll take a look at the WD40, which is DFC, or WDFC, is confirmed to release their earnings this Tuesday, April 9th, after the stock market closes. And they are expected to beat their estimates, and investors are bullish going into the company's earning release with a 57.8 expecting an earnings beat. So definitely slightly below average. And they're not a really big mover, but we can take a look at Dave. Let's pull your screen up really quick. If you guys want to tap back on his screen, let's take a look.
Yeah, guys, WD-40 is looking really nice here. I like it on an uptrend. The 200-day moving average is pointing up as well. It's only a 2% mover, so it's nothing too fast and not a lot of overhead resistance. So it's looking really good. And, there's not much to say. We have an uptrend. We have a 200-day moving average. And this thing is keeping on. So I like it.
Yeah, that looks pretty good. What about previous years? Let's take a look at a couple of years, because that's 2 years right there. Let's take a look at 5 years on your screen really quick. Can you adjust your graph
I'm sorry,
to 5 years?
You want me to do the weekly? Sure. Let me throw out on the weekly here. There you go.
Okay. Yeah, that looks pretty good.
Yeah. Yeah, it's definitely got this uptrend to it, all the way back from its base. So this thing has just had a beautiful uptrend to it. So we can see that in 2020, it took a big hit, just like everything else did. Well, actually, in 2020, it moved up just like everything else did. It went straight up, and then it took its big hit here. So this is absolutely beautiful to see because it held its uptrend, and now it's wanting to continue higher. So that's a good sign for WD-40.
Yeah. Yeah, no, that looks good. Yeah, it looks like it could easily continue bouncing off that main red line, and because they're still building a lot of factories. Even Ford Motor Company's building two mega factories, one factory to build their electric vehicles, but also their batteries, and there's just more and more industries that are building stuff, and these are one of those essential items that's needed for industries and stuff. So this is always going to be a growing company, especially as we mentioned with Elon Musk, really getting more and more into more moon programs and Mars and stuff. They're just going to need more and more of these materials that will be needed for, I'm sure, for a lot of those missions and projects and stuff. So let's take a look back at the on my screen. If you want, let's click back on the Robinhood screen. We'll take a look at Wells Fargo. Is WFC. They are confirmed to release their financial earnings this Friday, April 12th, before the stock market opens, and they're expected to beat their estimates. Investors are bearish, however, going into the company's earnings release with a just under a 62% expecting earnings beat. Now on Thursday, April 4th, there was an unusual amount of about 7,600 contracts of a $70 call strike price that expires on Friday, October 18th of later on this year. So there's definitely a lot of time in between now and then. But $70 call strike price. Let's take a look at the graphs and charts on Dave's screen. If you guys just tap back on to the LofiTrader screen and let's take a look.
Yeah, again, guys, I just use technical analysis. I really believe in technical analysis because fundamentals can lie to you sometimes. Even though they come out and they say they have good earnings, they have, great future earnings, everything like that. None of it matters. The only thing that matters is price, right? If it's not making you money, then it doesn't matter what or how good the stock's doing or how good they look on paperwork. If people aren't buying and there's too much supply, it's going to sell off. So when Carlos says, well, they're looking bearish into the earnings, well, Wells Fargo is a bank, right? And there's a reason why they're bearish. There's a couple reasons why. And we could go on about how the Fed rate hike decision at 5.5%, they've been at a stay, and in April they plan to hold, and a lot of other banks are starting to go under because of the rate stays. There's a lot of things in the news. There's a lot of things that you could say fundamentally. They're not able to make much money because they have to sell at a higher price, and so people aren't able to borrow as much money, and people are defaulting on their loans, and yada yada yada. You can go, but what I like to say is, scratch all that noise. Okay, this right here is the reason why we are bearish. At 59, you can see it's bounced its head multiple times here. 1, 2, 3. Okay, now it's created a new higher low, which is great to see. We're above a 200-day moving average that's curling up to the north side. That's great. But with this push higher, this crazy move on a I think it's 2%. Let me just go to my daily really quick to show you guys. 1.6%, so I was close. This thing is going to bonk its head right here on its resistance. If not, maybe it doesn't even get above this area. So this could be a trend break or a base breakout to the north side, but it would have to do on a lot of volume. So if the earnings wants to come out with a lot of volume and break above this 59 area, that's great. Maybe it will. And if it does, it might have continuation higher. But the reason why I think that they are bearish into this is because there has been multiple areas of supply up here where people are selling off into this stock. So keep that in mind when you are looking at this. Not saying it's not good for the watch list. It's definitely good for the watch list. Anything that has earnings, that's a big, well-known name stock like this, is great for the watch list. It's what you do with it after the earnings is what's going to make or break you. Okay, so the earnings is on 4/12. Keep that on your watch list, guys.
Oh, definitely. I mean, definitely looks bearish, and especially with where we're at with the economic cycle and stuff. The financial stocks are what is entering their bearish phase right now, and that's why we're starting to see that other investors are also bearish because of that, but also what they're seeing on their graphs and charts. And so even if they beat their estimates and it goes down, a lot of people are going to be confused that, hey, they had great news, they beat, how come the stock's going down? Well, because it's priced in already, and buy on rumor, sell on news, and that's one of the reasons why we probably saw that small activity of unusual buying activity on the calls, because they're taking advantage of that momentum between now and then. They're going to sell their calls and secure their gains, and then wait until see what happens after the earnings. And so, and when we see, because it's not even at or close to the $70, it was what, $59. So we're still about $10 away. But when they were probably buying it, it was, when you're getting something, when you're getting options that's pretty far out there that expire for its expiration date, there's going to be very little time depreciation, but it's going to be a little bit more valuable. But you can kind of cut the cost down a little bit by staying out of the money. But at least it's not going to depreciate as much because the expiration date is so far away. But it's still it's going to provide a lot of interesting news. It's going to provide some interesting volatility. It is priced up there, and so it's definitely a good reason why we should put it on our watch list. Let's move up to BlackRock. Is scheduled to release their financial earnings this Friday, April 12th, before the stock market opens. BlackRock's ticker is BLK. And they're expected to beat their estimates. Investors are bullish going into the company's earnings release with almost a 74% expecting an earnings beat. That is really, really good. That's 3 out of 4 odds that the stock is going to beat their earnings. And let's take a look at so if we look at the image here, because if you don't know what BlackRock is, they're really tied into just a lot of things, and so there's just a little bit of a fraction of what they kind of specialize in just by this image here. Again, a picture can say 1,000 words, and so they're heavily invested into the big pharma and oil and defense stocks and countries and all kinds of other things that kind of is a kind of recipe for war and stuff, or controlling different situations and stuff. Lockheed Martin, there. So it's just a very interesting company, and with what's kind of going on lately politically, as well as what's going on around the world and with the military, is definitely something that a lot of people invest heavily into. But let's take a look at Dave's Lofi's charts and graphs really quick, and kind of take a look at where we're at.
All right, guys, is this the BlackRock we all know and love? Maybe not. I don't think we all love it, but they get a lot of hate. They get a lot of hate because they become this entity, right? They become this big point your finger at kind of thing, and it's kind of funny to hear all the hate on BlackRock, but you're hating on a company, not a person, And when I see BlackRock, I'm just like, holy cow! How do they keep all of this under control? It's such a huge entity, is it not? Anyway, make a long story short, we're kind of just trading sideways here, and we have been since December. So I'm expecting this thing to figure out a direction here. It doesn't really it's its own entity. It's not really following any one thing, And I think the reason for that is the same reason why Carlos just brought this up. I mean, it's in everything. It's got everything. It's got its fingers in everything. And that being said, it's definitely one to follow. If we look at the weekly, you can see it's on a long-term uptrend, as it should be with it being invested in everything. So it being right here, I would say it might not be the best area to buy, because if you look anytime the best area to buy would be on a weekly 200-day, right? If we look at the daily, the max daily, you can see it chops through that 200-day moving average. Now, it is on a rising 200-day, so that's good. But when it comes to investing in this thing, it's very, very slow. So I think it's a for sure thing over time, but don't expect to get rich off this stock. But keep it on your watch list because earnings might surprise us.
Yeah, it's just one of those interesting stocks that, like you said, gets a lot of attention, gets a lot of hate. But, as an investor and a trader, we're always told to never get attached to any particular stock, because if you do, then bad things can happen. And so we're always want to try to take advantage of opportunities that every stock that can provide. And so there's a lot of great opportunities out there, so we just never want to fall in love with any particular stock or really hate any particular stock. Emotions is what can really affect your buying and selling decisions, and that's why we want to keep our emotions out, because otherwise it will definitely affect your trading. And so the next one here is Citigroup, and so Citi, or the ticker is C, is confirmed to release their earnings on Friday before the stock market opens, and they're expected to beat their estimates as well. And investors are also bullish going to the company's earnings release, with right around a 56% expecting an earnings beat. So it's definitely below average. And however, on April 4th, there was an unusual amount of buying contracts of 25,000 of the $62.50 call that expires Friday, June 21st. So that's a lot of call contracts for this. Let's take a look at the Lofi's graphs and charts on Citigroup. If you guys want to tap back onto his screen, let's take a look.
All right, guys. Well, when I put this thing on the weekly, you can see this thing has just been up and down and up and down. I mean, it's crazy just how this thing hasn't ever really got out of its range. So, like, when you look at something like this, we're kind of right in the middle here. So it's kind of hard to really gain a sense of direction. But if I had to guess, and of course it's only a guess, this thing will want to continue higher to meet its average area of $80 before coming back down. So it might do that, but I have no idea. The thing is with Citigroup is, like every bank stock right now, they seem to be moving higher, right? We looked at Wells Fargo. We looked at Citigroup. BlackRock you could consider like a bank stock because it holds a little bit of everything. There's definitely some area on the ETFs for bank stocks too. You can see that they're kind of the ETF itself is just sitting right on the base. It kind of looks just like this section right here. So the overall bank stocks could either go one way or the other. Now, when we look at this, of course, a curling 200-day moving average is positive for the longer term portion of the stock. And as you can see, guys, like, let's just go back to the weekly. Actually, we'll keep it on the daily here. But if we look, where it comes up and it comes down, right? So, because I just want to prove to you this 200-day moving average, right? So when it's below a 200-day moving average, it's heading down. When it breaks through this 200-day moving average, it starts heading back up. Now we scroll over. What happens when it breaks down below a 200-day moving average? It continues lower. When it breaks above it, it continues above it. When it breaks down below it, it continues lower. When it breaks above it, I don't think I need to carry on. This is a great example of why I use that 200-day moving average, because if just on this stock you decided to take your whole account and buy in and out of this anytime it broke through, sure, you would have some weird volatility in here, right? But every time, as long as you were taking profits, you would be wildly rich right now, just playing both sides of that 200-day moving average. Well, this right here, as you can see, broke up. It's heading up. It's kind of in the middle of everything right now. But my guess is it's going to come back up to that $80 area. So if you're a range type trader, this might be, an area where you can pay attention to. But I would wait personally for either the top or the bottom to get in. Now, with the earnings coming in, it might excel or dampen that process. So it's definitely one to keep on your watch list.
Yeah, definitely right in the middle. Could go either or. To be determined. But let's take a look at, if you guys want to click back on my Robinhood screen, let's take a look at Progressive. This is the last most anticipated financial earnings for this week. Progressive is PGR, that's the ticker, and they're confirming the release of their earnings on Friday morning before the stock market opens, and they're expected to beat their estimates. Investors are also bullish going to the company's earnings release, but with a 67, almost a 68% expecting an earnings beat. So it's good to see it's a little above average. There was some unusual buying contracts, a little over about 1,100 contracts of the $220 call strike price that expires on Friday, August 16th of this year. Let's take a look at LoFi's graphs and charts on that. What's your take on that?
This is nuts, Carlos.
Oh my
I had
gosh.
no idea Progressive was doing this well in the overall market. I'll just zoom out and show you guys on the weekly here. This thing is almost going parabolic.
Under the
For a big
radar.
boat
Wow.
stock like this is nuts, guys. What is going on with Progressive? Apparently, everybody needs insurance. Everybody's buying those new houses, so everybody's spending that money on that insurance. Wow. This thing has been holding a 10-day moving average for quite some time. The last time it tried to break down was this 21-day moving average, and it just got soaked right up. I bet the relative strength on this is probably 99 if I bring it up. So what's the ticker? PGR. Let's just take a look. PGR.
Well, and we've all probably noticed that all of our auto insurance bills probably went up, 10%. I know mine has. Yeah, I'm guessing yours may have. And so if we were to talk to any of these, higher up insurance guys about, hey, why, is this going up? They're going to say, oh, because it's inflation. It's harder to find. If your vehicle is totaled or needs some kind of body work, it's harder to find these parts that there's already a shortage of. They cost more. Labor's gone up substantially. Some of these body shops, they're charging $100, $150, $200 an hour for labor or whatever, and so it's just expensive, and so these insurance companies have to kind of accommodate for it, but also it's also for profit and gains, and we can easily see that in these on these charts.
Oh, absolutely. They the CEOs of these companies, they absolutely need gas for their helicopters so they can fly it to their yacht, so they can take it to their private island. I mean, it's necessary in so many senses, and I'm only kidding, by the way, but this does have a 94% relative strength rating compared to the S&P 500. So these are one of those buy dear, sell dearer type of stocks that we talked about earlier. Now, this thing's absolutely beautiful. These are the things that get me excited, because then I'm looking for a trend break in these stocks. So here you can see this would be one of those trend breaks where it comes back down, bounces off of a 21 or even a 10-day moving average, depending on how high it gets away from it. And I love to see the look of this stock. I love to see it pushing up higher like this, because I'm sure this is in the S&P 500 itself, so it's helping keep the S&P 500 up there and inflated. This is a nice stock, and it's going to be interesting to see what's on earnings. The only thing really I have the bad to say about this is it is a slow mover. Now, granted, if you would have put, $100 in this, say the beginning of the year, you threw $100 into this, you would definitely have a lot more money on this thing. You could have taken that, and you'd be up 33% on your investment. So it's absolutely beautiful. Now, not a lot of stocks go straight up like this, guys. So it's kind of impressive to see how much more juice this thing has. I don't know. But yeah, it's definitely one to keep on your watch list, especially if you're into a longer term portfolio. So.
Oh yeah, definitely. But let's go back to my screen, you guys. Let's go back to the Robinhood screen, and so as we get closer to the end of our due diligence, it's always important that we take a look at the top 5 things to watch in the markets by theinvesting.com, just to make sure that we're not forgetting anything. or missing anything that they may have found. Now, the United States inflation data will be in sharp focus in the coming week after Friday's blowout jobs report raised the prospect that the Federal Reserve may delay interest rate cuts for longer. Big banks kick off earnings season. The European Central Bank is to meet, and geopolitical risks look set to continue to support oil prices. Here's what we need to know to start our week. And the first one was the United States inflation data, which we talked a little bit about for Wednesday, with the economists expecting core inflation, which strips out food and fuel costs, to a 3.7% year over year from the 3.8 from the prior month. And again, we're talking about how that's bearish, but there were some other bullish reports in there as well. So we can easily see a lot of volatility, a lot of up and down, a lot of big swings, or stocks just flying off off their own direction. Some stocks flying up in the green, a lot of stocks flying in the red, and so that day is going to be a very, very volatile day. Now, data on producer prices on Thursday is expected to point to a more moderate increase. The inflation data comes after numbers out on Friday showed that the United States economy added far more jobs than expected than last month, while wages rose at a steady rate, indicating that the pace of inflation may be slow to moderate. The combination of a strong employment data and slow progress on inflation in the last couple of months has amplified the calls among top Fed officials, including Chair Jerome Powell, to be patient as they approach the decision on when to cut the rates. And I've always mentioned that they have to be really, really careful, because when they start decreasing rates, that could cause people to a lot more people coming out of the woodwork, buying things. And if there's if they lower the supply of things and increase the demand, then we have inflation going back up again. And so it's almost like they're just better off not even messing with the interest rates anymore. And so the Fed is to release the minutes of the March meeting on Wednesday, where officials continue to expect 3 cuts for this year, with less conviction relative to their forecast from the end of last year. In wake of the Friday's jobs data, money markets are now pricing in 2 rate cuts this year, down from 3 previously. Market watchers will also get the chance to hear from the New York Fed President John Williams on Thursday. Now, on Friday, Fed Governor Michelle Bowman downplayed any urgency to cutting rates and warned that should progress on inflation stall that might even push the central bank to raise rates again. So number 3 is the earnings, which we went over a lot. Quarterly reports from the major banks will kick off earnings season in the earnest on Friday. Investors are counting on robust corporate profits this year to support rising valuations as the stock market has rallied to record highs. The S&P 500 is up more than 9% year to date, which is a lot. That's 3% a month, following the strongest first quarter performance since 2019. But the bar may be rising for stocks to keep advancing at that pace, increasing pressure on companies to deliver strong results. Investors will also listen for companies' views on the economy and inflation. Number 4 is oil prices. Oil prices are up there a lot, as well as our gas prices. Now, oil prices are notched up a second weekly gain last week, supported by geopolitical tensions in the Middle East. Concerns over tightening supply and expectations about the demand growth. Crude oil settled at its highest levels since October on Friday. Now, the United States crude futures rose 32 cents to $86.91 a barrel, while the Brent settled up 52 cents at $91.17 a barrel. Now, for almost a year, I think it's been hovering right around $75 a barrel, and so now here it is, just right about $87. And so that's why we want to follow those the economic calendar or the economic cycle, because that way we know kind of when to get in and when to get out. And so under the where was the not the long term but the learning center, with the economic cycle and the stock market cycle, that's when we kind of really see how technology stocks have reached their top, energy stocks have reached their bottom. That's when it's the indication now is the time to reposition your portfolio, so that way you're not holding the technology stocks that are coming down. We're holding the energy stocks that are getting ready to go up, and here they are. They're up like 15%. But so is gold, which is very interesting, because usually when we see these two kind of doing that, we're starting to see a little more activity, military activity, and so that's always a possibility of escalation into a confrontation that could get out of hand. And if that does happen, a bearish market will instantly, have a huge effect on things, and to the point where we could see what's called a tripping the circuit breaker, which if you were trading right around the COVID time, we saw a lot of that. And if we start seeing circuit breakers getting tripped, we definitely want to make sure we are straddling, because stocks are going to swing up and down like crazy. And so but circuit breakers, when those are tripped, it just halts the entire stock market system for like 15 minutes. So it's a cool down period, just to kind of stop people from panicking. They don't want to panic sell, so so they freeze the whole system. And so but again, that's only if things start getting out of hand. And but just to be ready, just in case if that does happen. Geopolitical tensions look to continue to underpin oil prices as markets watch for any signs of any direct conflict between Iran, the third largest OPEC producer, and Israel, that could further tighten supplies. If Iran directly attacks Israel, that's never happened before, Phil Flynn said, an analyst at the Price Futures Group told Reuters. It's just another geopolitical risk domino about to fall. So, meaning where once, like I said, like a snowball effect, if once it escalates to a certain point, it's no stopping. And so that's where we're going to see just a massive bearish market for, it could be weeks or months. And so, but it's definitely, again, within our cycle for something to happen soon. It's just a matter of what and when it's going to be. That way, and again, bad news can be good news, because it can create a lot of volatility and good opportunities. And so that's one of the best ways to kind of look at it. Now, number 5 is the ECB meetings. They meet on Thursday and is widely expected to hold rates steady before it embarks on a rate cutting cycle in June. Markets see an almost 100% chance of a 25 basis point cut in June, so the President Christine Lagarde's comments will be closely watched for a green light. A flurry of policymakers have explicitly pointed to June as the date of a first move, and the latest data showed that the Eurozone unexpectedly fell to 2.4% in March, cementing expectations for a rate cut. Apart from the ECB, central bankers in Canada and New Zealand meet on Wednesday, and in Singapore and South Korea on Friday, with no rate changes expected. And so it's going to be a very interesting week, but it's always important too that we take a look at the stock options activity as we go into this coming week. I can't seem to close this ad, but we will always want to take a look at the most active stock options as we get into this coming week. This was what closed last Friday, and so Tesla had really dominated this list, kind of like it always does. And so, but Tesla was down quite a bit at 3.6%. And just under $165. Now, out of this volume, this 3.8 million options volume, we have almost a 50-50 call and put ratio. So people are almost like straddling or maybe picking one direction over the other. And so, but they are expecting more volatility coming ahead, whether it be bearish or bullish going into Monday. And so, but with Elon Musk's recent video, and again, if you haven't watched that, I highly recommend that you do. I do have that link in our featured announcements area that talks a lot about his plan for a lot of his space programs, which are also kind of tied into the Tesla. Tesla company builds a lot of parts and stuff for things, including space. So they all kind of have an effect on each other, and so that is a good growth, especially with Tesla getting ready to build and mass produce these the Optimus robot. These are going to be used to help with doing basic tasks. That way they don't have to pay someone to do it when these robots can do it themselves. And so Tesla will be a continued growing company. They've got a lot more to go. And so Nvidia, which was second place on Friday at 1.6 million options volume, they were up about 2.5%. $880 is what they closed at. But the calls is right around 57%. So I think more of these option traders are more bullish than they are bearish going into Monday. Same thing with AMD. They're same thing. Almost they close right around. Both of them close right around 2.5%. And Amazon almost 50-50. We are at 55% call ratio. Almost 45, about 44% on the puts. And then Facebook, which closed fifth place on the top options list, were up just a little over 3%. But they have about a 62% call ratio, so a little higher than everyone else. So definitely they are bullish on that. And this is a stock that we've looked at over the last several weeks or months. And detecting unusual activity was about $400 not that long ago. I posted an unusual a thing on that for because people are buying. I think it was a $600 call on that. I think it expires in January 2000 of next year. So, but but I have it buried in here somewhere. So, but that looks like it still has a lot more to go, and so a lot of people are bullish on Meta, Facebook, Apple, which is normally the top three, is kind of getting left behind on number 6. They're slightly up about 0.5%, but they're more bullish than they are bearish. A 61% call ratio. Then we have Intel. Intel's down. That's very interesting. Down at just under $39. Seems like Intel is kind of undervalued compared to all the other semiconductors. Like AMD and many others are over $100. They're in that kind of that triple digits for the share price. Intel, which we have about almost a 55% call ratio versus the 45 put, but it is on the list. It's not always on the list, so the options volume has been actively growing throughout on a daily basis, and so that is not to be ignored, because this is kind of like our radar, and so that way we don't want to watch anything slip under the radar. By looking at this regularly, we know what's normally on here and what's not normally on here, and that is a stock that was never normally on this list, and now it is. And so we definitely want to make sure that is on our list, especially if things escalate with Taiwan and China. And if there's ever an invasion over there, our semiconductor manufacturers here are going to really have to pick up the pace and develop more microchips and faster. And so that'll only just make these companies more valuable. So we definitely want to make sure Intel is always on our watch list because it is definitely undervalued. Then we have the Palantir Technologies. They were up 2%. We got almost a 65% call ratio, so that one is definitely bearish. It looks like a lot of these are just mostly bearish. Pfizer is definitely, bearish rather than bullish. But yeah, Pfizer is 63% puts. And so, but then we have Micron Technology, MUs is a ticker. Looks like they were down a little bit, but we got almost a 71% call ratio. So it looks like overall, a lot of these option traders are bullish going into Monday morning. But there are, it looks like oil, was up quite a bit as we've kind of been looking at. There's been a lot more oil stocks showing up on here. So we have the PBR, which I think is a Brazilian oil company, and then we have the Occidental Petroleum Company, or Oxy. They're on the list. They're not normally on this list, so that is some kind of unusual activity. So I think we're going to see more activity with energy stocks and precious metals, particularly with gold, is going to continue to reach record-breaking highs. And so I can see, or we'll see more of that on the list. Coinbase is on here. They were down 3.5%. As we mentioned with this cycle with cryptocurrency, investors are pretty much at this point, they're just going to hold off and wait to see what happens after the Bitcoin halving event takes place. And that's where we're going to see just kind of a decline in certain things, or we're not going to see really any movement in a lot of these crypto platforms, as well as the crypto activity. And up until that point, until it happens, again, buy on rumor, sell on news. Once the news happens, the things may dip down a little bit more, but then things will start to recover and to continue where it left off. And so we should also see the Robinhood app will continue to rise. We've seen a lot of unusual activity with that in the past, where it was about $10, $11. We found a $20 unusual buying activity on that on calls, and it reached it. Now we're starting to see $25 unusual activity on the Robinhood stock, which is Hood, for the ticker HOOD. I don't see it on the list here for Friday, but it has been in the past, in the last several meetings. So we want to make sure we're making sure that we know, again, what's going to happen before it happens. And so let's take a look at the most active individual calls and puts. If we utilize the options volume leaders, this will provide us by volume. And so the most active individual call and put that's still available, that's not expired, is this $170 call strike price with Tesla. Tesla, again, which is just slightly right around $165. It usually likes to kind of really bounce up. It wants to be back up in that $170, $180 area anytime we kind of see it dip down in that. So we see a lot of activity on this particular call. We see about 88,000 buying activity on it, where before it only had about 16,000 in open interest. And if you're not familiar with options, open interest is the total number of open contracts from the previous day that have not been traded, that have been traded but not yet liquidated via offsetting trades, which means that these were bought previously, let's say Thursday, and going into Friday, this is what's still remaining. It has not been sold yet. Now all of a sudden we see 88,000. This that exceeds this amount shows that is pure buying activity that's just going to stack on top of that. It's going to merge itself as we look into it Monday morning after the stock market opens. And so the next one is this PFE, which is Pfizer. We've seen some, I mean, it was down quite a bit on Friday to $26.66, but we have a $25 put that expires in 41 days in May 17th. And so we have a growing amount of volume on this one as well. But we also have a couple Tesla puts, $160, $165 put that both expire this Friday, April 12th. And so a lot of volume on that one that definitely exceeds the call. But we do have another call down here, $175 one here, so it just kind of adds into a good 50-50 ratio. And so there's another call there and another put. So there's another put on Pfizer, and there's a Google call right there, and an MPW. I'm not familiar with MPW. Let's take a look here. Medical properties. Looks like it's a penny stock, $4, but we do see there's some $4 put on that expires this Friday as well. So when we get down to the bottom, we always want to make sure we're also looking at the highest open interest individual calls and puts. That way, because when we look at these, usually the expiration time is much further out, and open interest shows people holding. They bought it and they're holding, which kind of goes to our what we always say: always follow the money. That way we know what people are investing in, what are they holding, and that way we can try to figure out more information. And so we see there's PayPal. We've talked about PayPal in the past, how they are wanting to become more innovative, and they have a new CEO that is ready to change the company. And so not that long ago when we started seeing this unusual activity, it was $50, like a month or a couple months ago. Now it's at $65. Well, this $150 or this $140 call strike price is still here and is set to expire next January. So investors are betting that PayPal is going to double. And so we have a large growing open interest of 188,000 people that are bought and they're holding onto this. Same thing with the SoFi, which is currently at $7.40 a call. A share, but there's a $15 call strike price that with the same expiration date. So even if you bought it at that and it gets to that, you just doubled your investment in a very short period of time. 200. Most of the time, these get to this point much sooner before the expiration dates, and then we'll see kind of a new strategy of people doing something different, whether it be the same stock at a different strike price or maybe venturing off to something else. And so then we have Snapchat, which we talked about Snapchat before. There was unusual activity detected, and they're currently at $11 a share. But we see a $15 call strike price that expires May 17th. So we're seeing a large amount of volume, but a growing amount of open interest as well. It's on number 3 on the highest open interest in the stock option out of the entire stock option system. So this is huge and not to be ignored. Then we have X, which X was what is that, like metal? United States Steel Corporation, and they're number 3. And so and we talked about the economic report. The economic cycle, and how the materials. Basic materials as well, like Home Depot, Lowe's is what's kind of in and ready for these long-term investments, and so this is going to be huge, as well as the steel for the military for defense stocks. So, but we do see that we have even though the share is at $41.22, we do see a $40 put strike price on this that seems to be growing. But it could be selling activity as well. Volume is always today's buying and selling activity, and so it's a very small amount. So we'll have to kind of determine to see if it's coming off of the open interest or if it's adding to it, as we get into Monday morning. And then so there's another SoFi, which we have a $10 call, so just kind of adds to the bullishness of this stock. And then we have a PBR, $15 put. Meta, we have, oh my gosh, look at that, $950 call. So they're, because we're pretty much at that $600 call. I mean, we're not quite there yet, but before some of our previous meetings, we were seeing that $600 call activity. Now, since we're almost there, we're starting to see a $950 call strike price for Facebook. But we're still almost 2 years away with this, but it also tells us, what do people know that we don't? Other than Facebook, I think they laid off like 7,000 people, a year ago or so, and with what revenue that they are making, they're being a little bit more efficient, a little bit more profitable with it, because the company's staff is always their most expense, and so Facebook is saving a lot of money, and that just kind of goes to their revenue, and so it kind of helps manipulate their financial earnings. So it makes it look like that they're more a profitable company. But with something this big, something's got to happen, whether it be another maybe pandemic or maybe Facebook comes out with something more innovative. I'm not sure, but again, investors are betting Facebook or Meta is going up, as well as gold. Not that long ago, this gold stock was $15 a share. Now it's $17.86, and here we still have a $20 call strike price that expires next January. So that has been trickling up the list, where it used to be on the bottom, is now halfway up the list. Then we have Vail, which is $11.80 a share. We have a $20 call, and so even if you're not into stock options, again, you can always buy shares of these and follow the momentum, because going from $11.80 to $20, that's like an 80% gain, and so that is a huge amount. And then you can always decide what you want to do after that. And so then we have Ford Motor Company, which has been kind of gaining up there at $13.28, but we have $11.17 put strike price, which is very odd. But this expires in June 21st. And then we have American Airlines, which is at $11.76. We have an $8 put strike price that expires next January of next year. Now, we did talk a little bit about the Delta Airlines and their stock with their financial earnings. And so sometimes in the stock options world, it's not always recommended to play earnings with a stock option, because of the what's called implied volatility crush, also known as IV crush. Implied volatility crush can devalue both your calls and puts pretty significantly because of the news and change of the Greeks. And so one way to try to avoid the implied volatility crush is by playing options on a similar stock that's not having options, and so it makes it safer to prevent being affected by it. And so so we're starting to see that this put for American Airlines is growing, and so if something bearish happens with Delta Airlines, it most likely will affect Delta Airlines. It will most likely affect American Airlines bearishly as well. And so then we have the Intel, which is something we've talked about on the previous page, which has a $40 call. It's currently at $38.71. It was down like 2.5%, and so but people are still bullish on Intel, because it is undervalued. Compared to all these other semiconductors that are up there, this one is kind of left behind. But we've seen this before when Nvidia had reached over $100, $150, and AMD was like $20, $30. I'm like, dude, this is an undervalued stock. This is going to And plus, we're getting close to that time where a Sony PlayStation, the Microsoft Xbox is getting ready to revamp their new consoles, and they start talking about Nvidia and AMD and all that, and they did, and boom, they all started skyrocketing. AMD surpassed $100. And it's doing well. While Intel has been kind of waiting on the side benches, and so eventually it's going to be its time, and investors see that, and so we got 85,000 open interest on an Intel right now, and so that's definitely very, very bullish. And so then we have Palantir Technologies as well. We have a $25 call. It was down just under $23. So I think in the long run that's looking pretty good, as well as Amazon. We have a $215 call strike price for Amazon. It expires this May. Apple, we have a $190 call that expires this May as well. More Palantir Technology. Then we have Lyft, which I remember hearing something about Lyft. I can't remember what news, but Lyft right now is at $17.84. But we got a $25 call strike price for Lyft that expires this May 17th, 2024. So we'll definitely want to keep a closer eye on the open interest, because this can easily accumulate throughout this week. And so SoFi, we've seen that one quite a bit. So definitely want to make sure that's on our watch list. And then we have AT&T, which is at $17.42. We have a $20 call strike price that expires this January as well. And so then we got our Apple put there. So definitely very interesting. We want to make sure we put these on our watch list, because we always want to follow the money. And this is where the money has been going. So hopefully that makes sense. We'll take a look at their NASDAQ calendar, see if there's anything kind of going on for this week other than the Monday short interest release date. Nothing major, but not Monday, Tuesday, but Monday we also have the solar eclipse. Hopefully nothing happens. Hopefully everyone stays safe. You guys, any questions? Are you guys pretty ready to rock and roll?
I'm just really excited to see what's going to happen, honestly. I think with the S&P 500 just being right on that cusp, or the right on the edge there of that downtrend, it could go either way here. We could bounce off that 21-day moving average, or we could break down from there and head even lower. So it's going to be really interesting to see what's to come.
Yeah, it's
but,
always exciting.
I just want to stop and just say thank you for having me. If anyone is interested, it is LofiTrader, all one word, on YouTube. I'm an affiliate of Robinhood Stock Market Watchlist. We try to do our best in the Facebook group page to keep everybody up to date on the news that we go over here. But most of all, thank you, Carlos, for having me. I appreciate you.
Absolutely. Thank you very much.